Today is Friday, December the 4th, and this is the morning report. All right, let's take a look at what we've got going on. We definitely know what we need to watch for. We got a little bit of range-bound activity this morning. Caught up in our regions of consequence, so we're looking at 2062.50 as a breakout level above. We're looking at 2053 as the breakdown below. Remember, the breakout above is likely to stop at short-term upper targets on the first run out. So you're only looking about 7 or 8 ticks on the breach above this 2062 area. Now, we know we can take it at 2060.50. If we move to a very small time frame, we can see that that will lead us to 2062. So we got about 8 ticks. Right now we're looking at the bottom of this. Job numbers not quite as pretty. They've got now an involuntary part-time workers space. But again, remember this level, the weekly pivot, as well as the important regions that we watch, likely to come back and retest the region. If it's to continue down, we know 2045 is a big level for the chart to hold. Big level. All right, so we've got a lot of stuff really on the move this morning. Very interesting range expansion. My thought is for the failed retest in this region, the pullback down, I've got 2051.75 in the blog, I believe. And then, of course, we slip into 2048 and then some. We do know we can take this short right off the bat. Look at the trend line events. Look at the slopes. Negative, and underneath the 10 simple moving average. We know that these major support areas are going to provide bounce levels. We don't really know where the buyers are set up just yet. So taking the trade short there, you want to be sure to take your 7-8 ticks and then put yourself on a wide trailing stop if you're interested in staying in there through the jockeying. We can always add back to the short if you're trading around the position as it comes up into 2057. That's going to be the midline event today. Very interesting. You'll notice from the blog, I've been writing for weeks. Hey, listen, it's got to hold this 2045 area. It's got to hold this 2045 area. It lost it, came very close to the daily 50, and then bounced off the weekly pivot to come into the space. Now we're looking for the higher low to see if this chart can manage the hold into the space. Otherwise, it's going to be pretty bad shape for this chart overall. It's going to start slipping down into much lower levels. I suspect we hold 2040. If we don't, we're going to use a 3/4 length here, 2032.75 being the next support area, but we know that's really 2038, 2039. Watch that from the blog space. All right, so that's what we're looking at from the ES perspective. Here's the TF. And once this report is closed, we'll get back to normal discussions on a more definitive level. I am releasing this. So here we are. Level to watch, 1171.50 came up into the retest, 1171.10. So the failed retest there giving us a breakdown zone for the chart. Upper level, 1177.10. We can see all kinds of congestion between 1173.40 and 1174.40. That was me spilling my tea. So that's really what we're looking at, downside momentum. Once it loses this region, we're going to look into the prior wicks, 1167, then the prior day's low. Look at the suction here. That's the weekly 10. So we are going to be watching that. Momentum remains negative as the chart pulls back into baseline support. But overall, take a look at the TF. Just like most of the others, we're still sitting above that 50. For the ES, we've got a little bit of hyper expansion, so reversion to the mean is very likely as this chart drifts into support. We're going to be looking at the support level really to hold us at about the 1161 region, right around there. But that is negative drift. Look at the slope. Negative, 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 and below the 10 and the 20 simple moving average. We know we can take the breakdown. Hey, listen, take a look at this. Watch this. Here's the first break, collapse of the region of our level in question, 1171.50. Look at how high it bounces. Listen, unless you're very small size, this is going to be quite an aggressive bounce against you. So what do? In spaces like this, it's eventually going to break because we've got slope and momentum, everything's sitting in our favor. Watch for those retests to reinitiate your trade. Cut and run if it gets above these support regions. You can lose a little and come back to make a lot on the far end. If it comes all the way back up and it decides to bounce, you're just going to be in dreadful shape. And of course, that is just a specific strategy there. We do know that when a chart bounces with the moving averages that stay relatively flat, we are going to be watching the chart come up into the midline of our region right there at around that 1174 area. Rejection of that region remains a short. A bounce up and retest of that area will shift it to a long. Right now, we're testing those lower zones, really pressuring the buyers in this space, really, really pressuring them to hold. All right. And so that is essentially what we are looking at there. If you're in the middle of the move, you go, gosh, I didn't catch that because you did not use our normal morning mechanics before we started this event. You can look here and realize that look at what the chart's done. It's lost the 10, retested it, lost it again. It's going to pop up into a higher low in some measure. You want to watch that rotation, anticipate the motion into a short unless it collapses all the way down into this area, and then you're going to watch it flatten out, stabilize, and try to hold support. Okay, and the prior day's low usually brings in value buyers who are trying to pick bottoms. All right. They are going to try and pick the bottom. So we want to be careful about that. Realize that they could come, sneak in there, and then move themselves up into this region. Be very conscious of where support and resistance are sitting in the region overall. Watch that 1171 to 1174 area on the retest. 1177 is going to be a break, but again, it's going to be a break into minimal movement to the upside, 7-8 ticks, potentially a little bit more than that, but not too much more than that as it breaks down and comes back into the level because it will be counter trend. And so watch as our 1167 begins to hold some traction here. We do have a bit of positive technical divergence, but again, this is a very negative space, so bounces are going to get sold in the short term as the chart drifts into a steeper level of support, which really should be around here. Notice the congestion from a daily perspective. That's what we're going to look at. All right, taking a look at the NQ. This chart is relatively range bound, right? I mean, it is relatively range bound in the short term. Losing the level that we want to watch for the breakdown, 46.1275. It came in, tested it once, came up, gave us the lower high. We know the next test is going to bring us in. We can take a look at that very, very cleanly. Watch that. It's money. We know what to look for there. All right. So we've got this. We've got the midline event at the 46.25 area. And then we've got the daily pivot setting up 46.35. Boy, I'd love this thing to snap to grid. 46.35.50 as that top end breach into that space. Sellers should pop in these bounces as our short-term trades now have shifted to bearish in general. Where is this chart going to? Well, if we take a look at this, we've got 4602. Let's see, if we move it here, look at that, 4603 and a quarter. That wick is where this chart is finding a value area, right in this congestion space from the prior day. We know if it loses 4603, there's, few more points to go. And then look at this tweezer bottom formation at 45.92. Let's say that's 45.92.50. For those of you that look for exact levels, that's unreasonable because there are millions of us trading and we're all trading together with different ideas. So there is no exact level. There's only a range of motion. And that's very, very important to realize. That being said, it's an important range of motion. Nevertheless, buyers came in here the last time, and so we expect them to come in here again. The problem is it's a very negative space, so they're going to bounce until they can't anymore. Right? See them setting up right now. They're bouncing because that's where they came in the last time. It's how much pressure do they have in the space. And right now, we are looking at rising volume in that region, but on the small time frame could easily be setting up a candlestick reversal formation. So you want to watch for that very, very carefully. Levels above 46.25 going to look like buy zones into 46.32 to 46.35, but again, that's going to be fairly counter trend to the drift. A lot of people thinking that we ought to hold fairly well, but I got some things to say about Draghi, but I'll do that after we finish this recording. It's very, very interesting. I think essentially people are upset, but it was very well played. And so I'll talk to you about that in a minute. Aha! Look at this. It bounces off 39.60. Why is that so very important, my friends? Let's go to a very long time frame and have a look-see. When we take a look at these two spaces, we can see the last time we were sitting in this space, the low, 39.61. Isn't that interesting? Pierces the level and then bounces again. So here's the thing. My thought was if it loses 40, it's going to make a new 7-year low. And it did that, right? By 1 penny, but the buyers have come right in. Why? This is a key value area, right? Key value area. Dropping past this level, look at all the buying that occurred right around this region. Look at that big step into the area. It's been a buy zone. People are thinking about it being a buy zone. Here's the rub. We know there's going to be a bounce because it's a buy zone. We did it here. They're going to try to step in. They're going to try and push it up. The problem is the landscape doesn't quite fit a hold of the bounce. They're not going to cut production, right? Apparently, Saudis say they won't do anything without the non-OPEC producers agreeing to cuts. Yeah, Russia's not going to play that game for sure. And whoever else is involved, Putin's not going to go along with anybody just because. That's just not going to happen. Okay? So now we're sitting with more oil that's going to stay constant into the market. Iran is going to increase production. They've already said they're going to, right? And we continue to have diminished use and continued build. That means bounces are going to get sold. And they're going to continue to get sold. I don't have any idea where oil is going to go. I just perceive that it's going to be down. And so for me, as an intraday trader, I'm going to anticipate that down is what it is I need to look at. So if I look at this group 20-year cycle, I can see that 2008, I've got this level and this level to concern myself with. So we will see how that happens, right? We'll see how that rolls. Let's look at the intraday event. Intraday event, hey, listen, we lost 40.10. We lost 40.10. The goal is, can we recapture it? Below 40.10, bad news, right? It's going to continue to drift lower. People are going to be really trying to use up a bit of their powder, trying to hold it stabilized. It may hold, folks. It really might. My thought is that it doesn't. But here's what we need to look at as day traders and intraday traders is, let's take a look at this. Scott brought up a great point yesterday about what to look at in terms of the prior day cycle. And that's why 4010 is so important, right? Pops right into that prior day cycle. We need to watch for it. Take a look at this wick. That's going to matter. My thought is that's 39.84, I believe, is the low there. Yes, it's 39.84. Let me mark that appropriately. And so if we bounce off of that region, we could meander around this area. What do we have? Flat to upward sloping moving averages. Hyperextension from the mean, right? Reversion to the mean trade, quite possible, unless buyers finally decide to throw in the towel. If they finally decide to throw in the towel, we will have ourselves a really solid dump of contracts into the market. Right now, the jury is out, right? We are at a decision zone, and right now they are pushing the buy levels up for support. They're selling off at that 40 range for now. So as it looks, if you say, hey, listen, I'm long because of this bounce, if it loses your 39.73 area, this long is not going to hold for now. It's going to be dipping a little bit lower. What do we see? Negative drift, negative drift, negative drift, all over the place. So we have continued action to the downside. I don't think this is a decision zone at all. Above 40.10, we'll need to wait for a retest of that formation. Notice how the 5-minute looks. It really gives us a shot at saying, hey, listen, I understand I have a potential reversion to the mean trade long, but for this chart to hold long, I've got to see a recapture of the 4010 area, a retest of the 4010 area, and a continuation upward for that to be stable. Right now, big battleground, big battle zone. And so, taking a position right now is a little bit like rolling dice, not really quite my bag. So I'm waiting to watch those pieces converge properly. Here we have a look at Apple. Apple is, hang on a second. Apple is completed with the gap fill, right? We had the gap sitting right over here. So it's filled the gap. It's got to get back up above the gap, but notice the location of very important moving averages. There's a lot of selling here. Bottom line is, if we get up above 116.30 and retest the region, get on top of these moving averages, with this kind of momentum, we should be in good shape to move forward. But that's got to happen. If it doesn't happen, this chart is not going to lift. It's either going to sit down here and meander around these regions, or it is going to drift essentially lower, right? So what are we looking at? You know what? Loss of uh, 115 short, coming down into 114.30. That's not a lot of movement, right? And my thought is, hey, listen, the chart has hyperextended from its 50 simple moving average, and it's come through after a really nasty day bouncing. Should find buyers around here, right? This is a particular buy zone. Notice what happens when we lose the 50. We do try to recapture it. So I suspect there are buyers lurking around here from a value perspective. Here's what the story is, though. If you allow the chart to pull back into support and then you say, hey, listen, I'm going to try to capture this on a double bottom to take the pop. If it comes into a lower high here and pulls back and retests your original entry area, chances are it's headed lower. So that's going to keep you from staying in a negative position when the chart is likely to roll over. All right, taking a look at Netflix. Look at this thing. I've been talking about this being in an exhaustion space for a long time, it feels like. Let's get rid of these drawings so that we can take a look at what we've got going on in general. We leave the Fibonacci's up there. That's about a 2.14 expansion space anyway, right? And so here's what we have. I think, below the 126.60 area, it should break this low, right? So we're really looking at about that region, not the low of yesterday, but this congestion zone to give us the breakdown event. That being said, looks a lot like a buy zone, right? Here's an S-curve test. There's our little S right there. And so looks like a buy zone in short order. Here's the thing. Moving averages just coiled in a squeeze. It bounced out, it came back, and look at momentum not shifting at all. So, although it ought to be a buy zone, we're not seeing momentum shifting into the space, so it could have one more flush down into the prior congestion level down at 125. Here's the weekly pivot, 124.50, 124.60. That region could be the support zone. My thought is it's just lost the upward trending 10. It is going to try and recapture it. Going to look at the prior day's low, the prior day's expansion level for us to consider, that 128.80 as a potential rejection region if the chart is rotating over. Netflix is shooting the moon right now, and certainly, I really felt like it was sitting at a blow off top, and it did. Fell off very nicely, but it's still going to come into support because there's so much buying power sitting here. I mean, take a look at it from the daily. All we're looking at is buying power. That's just insane, right? Very, very lot of buying power right there. So, that being said, below the 126.70-ish area, we'll have a short. A long would be hard for me to conceive of right now, but I would say, above 129.20, we're looking at better motions. You just want to watch it up here in this zone, particularly the 50% marker between the weekly pivots at the 130 level, and that might end up giving us a whole new band of sellers. And of course, you can go to the blog and get these levels specifically sitting in there. So take a look at Tesla. Tesla is really quite range bound. We've got a ton of price action here. And let's take a look at what it is that our form gives us. That's the monthly 12, right? Holding as support for 1, 2, 3. This is our fourth day. So we know 231 is pretty important. We've just started losing that 10 squeezing action, so we should try to recapture it. My thought is this: if you see it come into 236 and start looking weak, shorting action sitting right there. And we're looking at about maybe it won't even get to 234, right? If it gets up above 236 and then retests and holds 234, then we've got our upside rotation. Other than that, look at the slope sitting down under the 10 here. This, oh, look at this. See how that's a negative sloping 50. We know what's supposed to happen when we hit and breach a negative sloping 50. Going to revisit that area very well. So watch the rotation there. The only fly in the ointment is that there really is a band of buyers sitting at that 231 trying desperately to defend the region, and so it might not lose the level. But if it does, it should come back down and at least test the weekly pivot at around 227. By then, that 50 might have rotated upward into that space. So watch the 234.50 area today for a decision zone. Here's a look at Baiynd. Baiynd holding a support zone, 207. Look at the 50 sitting right underneath there, right? So there's a secondary group saying, hey, listen, I'm trying to hold this area. This chart really, it's an upward sloping chart. There's momentum in the longer time frame, but the shorter time frame shows the breakdown. What have we done? We just lost the 50 here, then the 10, then the 20. So now we're recapturing the 10. Maybe we recapture the 20, get back into this 210 area. That's been a big breakdown zone for quite a while. And so we really are anticipating that this bounce action really does come into this 210 area. That being said, could you trade it from 208.80 into 210, and then if it holds, you move up and everything's all fine and dandy? Potentially, yes. But that's very suspect because of the slope and momentum. But it is a possibility. My thought is that it just comes into 210 and then rejects on any little bounce event. If it can't breach the 208.80 area and it finally loses 207.40, you've got downside. And so I'm going to shift the 207.46 area. That'll be the breakdown zone in my estimation from this space. It'll be support zone for the long as well as it comes up into the region. Next one on the list, Yahoo. Very interesting, this one. We just finished a great trade here, of course, getting out well before the breakdown. And now we are looking at support zone action, right? What is this chart going to do right here? And that is very, very interesting in my mind. You know, certainly below 34.30, we've got ourselves some shorting action. We just breached this 10, lost it again. So if we come into 34.56 and we lose the level, it should lose this low and slip down further into the space. We can see buyers all the way down to here, but I think after this measure, if it loses this area, it will lose this group and slip down into the wicks here overall. Negative momentum sitting across the board in this chart as it rejects this big pop. The S-curve test event's going to be down here at around 33.90. Right? That's going to be the breakout area and retest of the zone. So we do want to watch for that negative drift showing that a bounce should be sold. And those bounces could be as far as 35.05 and really as close as maybe 34.80. If it gets up into this region, we now look at a reversal of fortune and back up above all of that. That again, general tweezer top action. Above that area, it's going to have its sights set above here. All right, last one on the list, Facebook. And the markets have started moving around again. So here is Facebook. Taking a look at this one, this chart is a little sloppy, very much in a squeeze action event. Look at this, negative slope, underneath flat to undulating moving averages. So, momentum in general just went negative. Could it be headed down here? Yes, but notice, buyers step in here and here and here and here, and here we are again. So we expect the buyers to come in. Here's the thing. If you expect the buyers to come in, and they probably will, watch for the bounce. If the bounce is weak and it only drifts up through this space, you know that sellers are ready to go. For me, this chart losing this level here does open up the immediate short, but only into congestion as it bounces to recover, right? So this could be easily a bear trap if you don't think about taking your profit at that first congestion target, because so many buyers have come to play at this 104 area in the past. All right, so what's the general slope? Negative, but we are coming into big support zones. So when you take the trade, watch for buyers to cut you off at the pass, and they could cut you off at the pass as quickly as 10 cents from here, or could be, 7